Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome guys, let's take a look on the gold market. So you can see gold is confirming our suggestion that shows more bullish signs rather than bearish, as we said recently, and we said that keep watching for 1714 area approximately, because it will be some kind of the indicator that shows what the performance and what the sentiment in the market stands, whether this will show another leg down or not. And that is great example of the market behavior, market performance, why we, in some circumstances, we recommend and call to split the position. So to not try to catch the bottom, because when you have the very good setup in scenario with significant targets, it could be more expensive for you to miss the entry and miss the continuation of this scenario, rather than trying to catch the better entry price. So that's why in the current circumstances, not only here, but if you remember in the Forex markets as well, and this week we talked about it. So split your position on Bitcoin, that was in the Bitcoin setup. So split your position, take the 30% on the first support and wait for another drop. If market will drop to the next level, well, you will lose nothing. You will close first position at the break even and take the whole position at the best price. But if not, if market will continue to move to the upside, you will be outside of this trade. But if you will get the 30% here, you at least will get some action. And that's actually what we have. Indeed, by this action yesterday, market has confirmed our suggestion. We said here could be signs of the bullish dynamic pressure, because we have rising action with a bearish trend, and market challenged the MACD indicator, shows the turning trend to the bullish. It means that market is standing high. Maybe here will be some pullback on the intraday chart, maybe not, because market is not at the rebound here on the daily, but we should be focused on the 1770 target. That's the nearest target where market goes, and probably this target will be reached. I'm not sure this will be definitely today, but maybe today as well. So it means that the current circumstance, we should not take any short positions. The intraday charts explain everything. So on the fall time frame chart, so you can see we said keep an eye on the C point. Here market has to turn down in a way if it will really intend to form the another leg down, or if it will not happen right here, it means that setup will be broken and market will change context into bullish. And indeed, take a look here, is no reversal has happened, market just moved above this area and starts consolidation at this level, preparing for a possible upward action. But why this area is so important, why we could accept reversal at this point but we can't accept reversal at that point? What's the difference if the ABC pattern will start right from here? Well, mostly explanation stands on the hourly chart, because when the market stands on a retracement, it usually very accurately responds on the targets of the retracement and on the resistance level. So usually if it indeed retracement, it comes to the resistance levels, and trend continues from the one of the resistance levels. But what we have on the hourly chart? On the hourly chart, market first of all has disrespected all resistance levels and has broken through the major 618 level. Now it stands above it, because major 618 was 1740. So right here was reaction. Take a look, market, we could say this disrespect XOP. So it stands around it, but it hasn't stopped, hasn't finalized the upward action right at the XOP. So XOP has been exceeded. The market stands upon it above this level. Yes, we could take into consideration 1618 extension of this XA swing, where the market stands right now, but this is minor explanation, guys. This is just, minor factor. It doesn't tells that this is definitely resistance and the market should turn down right from here. So that price performance tells that this is not retracement anymore, but market is standing higher. In the current circumstances, if even some pullback will start, maybe it will be to the 1710 area, maybe 1690, one of the level, that is possible. But this pullback, if it will start, that will not become the second leg of the drop to the 1630. That will be only the minor pullback inside of this swing, right? So this is retracement after the bullish swing, but not the continuation of the bearish action. Because here, if this retracement still will happen, maybe to the 1710 area, it could be the butterfly, guys. So this could be left wing of the butterfly. It's minor retracement here, and its upper butterfly could start swing of the butterfly. And in this case, we'll take a look at 127 extension is 1618. But we'll take a look at 127. This will be precisely 1770. So the butterfly could lead price right to the target of a larger butterfly on the daily chart. That's the short-term scenario that we will keep an eye on. So no shorts. Actually, we yesterday also said that could be really dangerous, but that was just an attractive point where a short position could be taken, because there's potential loss, but in stop order here could be placed very, very, very close to the position. But currently, we could say that probably no bearish positions should be taken. We could keep an eye on for a possible pullback. If it will happen, say, to 1710 areas, confidence support, we will get some kind of the godless triple to buy. In this case, we could consider possibly taking the long position. So that's what we see right now in the gold.